Welcome to the Commercial Real Estate Show, your source for insightful analysis and enlightening discussions. Hello, I'm Michael Bull, your host. Thanks for joining us on 42 radio stations, iTunes, YouTube, and the show website, creshow.com. We have a great show for you today. We're going to talk about student housing. You know, student housing has been a very interesting sector, especially with how well apartments have been performing. A lot of investors are interested in the market. We're going to talk about how the market's performing. We're going to talk about market projections. We're going to talk about cap rates. We're going to talk about some tips and strategies. And let's just get started now. Please welcome my first guest. It's Taylor Gunn. She's a research analyst with Axiometrics. Joining us on the phone. Taylor, thanks for joining us today.
Thanks, Michael. I'm glad to be here.
Well, we appreciate it. And Taylor, just to get us started, how is student housing properties, how is that sector performing right now?
Well, actually, we've seen the student housing properties overall performance has been strong. We're seeing beds leasing faster than the past couple years, and occupancies have remained stable. And also, we're seeing positive rent growth. Mm-hmm. Nationally, pre-leases averaging around 82%. That's as of June. This is up almost 300 basis points from around this time last year. And annual effective rent growth is around 2% nationally. But keep in mind, this varies by individual assets. Mm-hmm. We're seeing hundreds of properties with rent growth of 3% or more.
Nice. And those properties with the highest rate growth and rent growth, are those more Class A newer projects, or are they just in the around the universities that are growing faster?
It's a mix of both.
Mm-hmm.
We're definitely seeing the universities that are growing faster. A lot of those properties are increasing their rents because of the demand.
Mm-hmm. Okay. And how does this type of performance compare to, say, recession years and recent years?
Well, we aren't seeing exactly the same performance that we were seeing during the recession years, at least in terms of revenue growth. Mm-hmm. But we're approaching those levels and still seeing strong performance. But with student housing, it follows a different trend from conventional multifamily during recessionary periods because of more people dropping out of the labor force and enrolling in school. So demand is extremely high around universities and for student housing during those periods.
And for our listeners that may not be that familiar with student housing, maybe they're involved in other sectors. So then during the recession, student housing did well?
Yes.
Yep.
We saw revenue growth average around 2.4% during those years.
Great. So I guess that's one of the reasons institutional investors must have more of an interest in this sector, right? While
Exactly.
Maybe some other sectors are doing poorly, this sector's doing well, right?
Right.
Yeah. Well, what are your predictions moving forward, Taylor?
Moving forward, we're seeing that occupancy will remain strong, averaging around 150 basis points above the long-term average, at least for privately owned student housing properties, mm-hmm. and rent growth to average above long-term levels as well. We're projecting that supply growth be sustained but kind of moderate, and with healthy enrollment growth, this will help drive the performance through for these privately owned student housing properties.
Okay. And I guess new supply is always a concern to investors in a market, especially a market like this that might be a little smaller than the normal apartment market. How have new supply levels been running in recently and compared to the past?
Absolutely. So historically, we've seen over 600,000 off-campus beds delivered throughout the student housing market, mm-hmm. and over 200,000 of those have been delivered from 2011 to currently. And we saw sort of elevated levels over the last few years, but deliveries for 2015 are down around 20%. Mm-hmm. We saw 63,000 beds delivered in 2014, which was kind of a peak for the sector, but we're seeing 49,000 off-campus beds expected for this year.
Okay, so new supply is not what it used to be, right? So there's less new supply coming online.
Absolutely, yes. And we don't really see it as a bad thing. Historically, we've seen kind of these peaks and then a slight decline for a few years, and then it begins to trend upward again.
Okay, and why would we see less new supply right now? As it has to do with available land or the economy, financing, construction cost? What might lead to that?
I think it's a mix of the land availability close to campus. Many developers target the core locations right next to the universities, and as the sector has grown, that land has dried up a little bit. But also construction costs are a part of that as well.
Right, because it seemed with kind of the growth this sector's had, the stability it's had, the forecast that you'd see new supply, but I guess if you can't find the land, it's too expensive to build it. That makes the numbers hard to work, right?
Absolutely.
Well, what are some markets, Taylor, that have seen good growth and good enrollment growth and also new supply?
For new supply, we've seen several of the larger schools, Texas A&M, some at Texas State, University of Texas at Austin historically has seen quite a bit of supply, but it's kind of leveling off now. LSU, Louisiana State University, is one that's seeing the most supply being delivered for 2015. In regards to demand, there's a few schools that historically have seen strong growth. Florida Gulf Coast University historically has seen around 11% enrollment growth per year, and we're projecting that that remains healthy over the next 5 to 6 years, around 2.4%. Savannah State is also another one that's actually among the top in terms of projected enrollment growth over the next 5 to 6 years. They're projected to average around 4.3% growth per year.
Well, it looks like there's still some good opportunities out there to put some new supply in line. Well, what are some of the other factors, Taylor, that are impacting the student housing market? It seems to be its own little world compared to some of these sectors.
Yeah, a few factors that we've seen impact the sector. One is the lack of supply in the early development cycles of student housing. This has created some pent-up demand throughout the sector, along with moderate enrollment growth historically. Enrollment growth is the main driver in the student housing sector, so positive growth creates the new demand for student housing. So if we look at the 160 markets that Axiometrics forecasts on, we've seen enrollment growth average around 1.4% per year historically, and we're projecting that growth to remain positive over the next 6 years. So this will create new demand of over 300 new students across these universities going forward. So we will need even more supply to fill the demand from those growing students.
And this new supply that's going to be needed, is there an affordability issue to that? I mean, can these new students coming in afford kind of new, the privately owned student housing?
That's always a concern and a discussion that we hear a lot is, the affordability not only for the student housing properties, but, tuition growth as well. We're seeing the new properties being built at the top of the market, and it is a concern for developers and owners and operators of whether students will be able to afford that going forward.
Yeah. Well, as you analyze this market, is there anything that kind of jumps out to you that might surprise people when you're analyzing the student housing industry?
Not every. I get this question a lot. I don't see many surprises. My thing is, I feel like the sector just continues to improve. And I think it's more of a surprise that it continues to gain momentum and continues to mature despite, the increasing supply, especially on a national basis.
Yeah, I think that is a surprise. I guess everyone expected it when there was job issues, right? And a lot of people are going back to school, but you can see it continue to improve. I guess it's great. It's good for the economy, right?
Right.
Excellent. Well, Taylor, thanks for joining us today. We appreciate you being on the show with us.
Thanks so much, Michael.
If you'd like more information from Axiometrics, visit their website. It's axiometrics.com. Well, stay tuned. We'll have more on the student housing market. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.